I'm going to get right into it because we have a not a long, but we have a lot of information I need to share with you today, so let's get started. So, my name is Roger Scott. I'm a retired hedge fund manager, and I'm a head trader for Wealth Press. I've been doing this for about 25 years. Stocks, options, futures, and forex. I got my start, believe it or not, I started trading just shortly before I got accepted to law school, right after I applied and shortly before I got accepted. If I waited just a little bit, if I just started a little bit quicker, I would have never ever gone into law school. And actually, I never practiced law. This has been the only thing I've been doing for the last 25 years, and it's been the best thing ever. Let's quickly go through the disclaimer, and I'll jump right in immediately. This is for educational and informational purposes only. We're not licensed financial advisors or brokers, and this video is designed to teach you the risks as well as rewards of trading. We're not implying any guarantee or profit, although we're going to show you some amazing trades, and we're not a service that tells you what to trade. Past performance does not equate to future results, and the results that we may discuss may not be typical. The biggest thing I want you guys to know is this. Paper trading is very, very important, and it can teach you the propensity for a trade, but it will not teach you how to deal with winners or losers, because there's no trading, because there's no emotional involvement when you paper trade. So in order to really, really learn how to trade, you have to do the real deal. You're going to have to trade. All right. In the next hour, I'm going to show you how to find stocks and options before they experience explosive price moves, before any indicator identifies them, before big money on Wall Street begins targeting them. We're going to do all that right now. I know it's a lot of stuff, but we're going to get into it immediately. So take a look at this gain. 30% gain in 7 days on pharmaceutical. We entered on the 17th when price was around $13.50. The breakout entry, if you waited for the breakout, you would have waited till the stock hit $17.15, and your profit target would have been around $16.50. So if you waited for a breakout, you would make nothing on this trade. Nothing at all. You would actually lose money. But because you did not wait for a breakout, you were able to bank 30% profit in 7 days, and that's not with leverage. We'll get into leverage a little further. Take a look at this overstock trade. 34% gain in only 21 days in overstock. Again, if you waited for the entry for the breakout, you would have gotten in at $24.50 and you would have gotten in at $26.50. We were able to enter around $19, $20. So we were able to make money on this trade. If you waited for a breakout, you would make nothing on this trade. So imagine, okay? Just imagine for a minute if you can identify stocks before they explode higher, before they see a big price move occurs, not after, okay? All indicators can identify price swings after the fact. We want to see things like this. Notice no warning signs, nothing, just a quick gain. Started off at $10.75, 54% in 28 days. No warning signs. And again, if you waited for a breakout, you'd be lucky to catch half of that gain. So I've always wanted to figure out what drives the price of stocks before the big moves occur. It's once the big moves occur, everybody notices it. All the funds are jumping in. All the educational and all the advisory services are talking about it. Momentum is moving in. Volume is spiking. It's too late. The game is over. We want to find stocks before they move, okay? Let's take a look at NVIDIA, all right? I'm sure everybody knows about NVIDIA. This was a hot darling last year. It was one of the biggest gainers of the first part of 2018. The stock made a 50-day breakout. It's moving above the 50-day moving average. Everybody notices it, okay? Everybody notices it. Now it's on everybody's radar. Everybody's seeing the move already. There's nothing special. There's nothing new about this, okay? All right. Now, your profit is greatly reduced if you buy after the breakout, okay? You don't want to wait that long. If you enter after the breakout, again, you're already buying when it's too late. Charles Schwab, beautiful triangle flat top setup, beautiful breakout. It breaks out, it's making a new time high. All gains erased 1 week, all right? Nothing exciting there, nothing really that interesting there. Nothing that's going to really change anybody's playing field, okay? So there's a major downside major downside to price breakouts, because they only work about 30% of the time. That's right, believe it or not, but we've done back tests. We've done tests over 40 years, and breakouts are only accurate about 30% of the time, believe it or not. They're just not that accurate. And there's a lot of volatility that happens around the time you see a breakout. So your risk is higher as well. And traders don't like 30% accuracy. They want higher accuracy. They want to have 70, 60% accuracy, not 30. Also, stocks are range bound 70% of the time. Now, here's a major problem with that, okay? If stocks are range bound 70% of the time, how are you going to know when the breakout will happen if you try to buy beforehand? You're ultimately putting yourself in the same position as buy and hold. And nobody really wants that. So trading breakouts does not work in a range-bound market when markets are range-bound 70% of the time. Here's the typical scenario. You buy a breakout, you get stopped out. You buy a breakout, you get stopped out. You buy a breakout, you get stopped out. And again, markets are stagnant about 70% of the time. All right? You can argue with me. I know we've had a lot of trends lately, but truth to be told, you're only going to get breakouts about 30% of the time over time. And that's just not good enough. It's not good enough for me. And majority of traders, they buy near the high. Take a look at this trade of Apple. This trade, I was looking at the volume in this trade, and you could see so many people piling in. It was just inevitable for this to happen. This is very classic. This is a flat top breakout. Apple's been basing forever. People are looking at the stock. Next thing you know, it plummets. It declines $12 in 7 trading sessions, all right? So again, there's a lot to be said about breakouts. They're easy to spot. They give you profits very quickly, but the problem is they're not accurate because everybody trades them the same way. Now imagine if you can buy Apple, all right, at the $160 price level, not at $182 level when the game is over. You want to buy Apple at the $160 price level. That's where you make some money. But again, how do you do that? So there's a major advantage to buying early. You capture a bigger piece of the price movement. You can get in ahead of the big move, and you're not competing with technical traders, and your risk is substantially lower. So there's a huge advantage to trading early, to avoiding breakouts. And I know you're saying to yourself, well, that's great, but how do I do that, right? I mean, if it was that easy, then everybody would be doing it. So, and options traders, all right? Let's say you trade options. You don't, and I'm going to try to keep this very simple. I know that we may have some guys in here who are not professional options traders, but options are very sensitive to volatility. They're very sensitive to being undervalued and overvalued. And most of you know when you have a breakout and you buy an option, you're buying that option near the highest swing high. And the only place left for that option to go is down. And that's why you see a breakout, you see an option, you spend $10 on an option, the stock bucks a few dollars, and next thing you know, that option's worth $6. So options and breakouts do not mix, all right? They just don't mix well at all. And I'm sure if anybody's traded that, you would know that. So here's the problem. So we all agree that breakouts have a major disadvantage, but here's the problem, all right? Unless you know when price will rise, it makes absolutely no sense to buy early, right? Because if you're going to buy early, you're just doing buy and hold. Remember when I said stocks trend only 30% of the time and they congest up to 70% of the time? So if you're going to buy before the breakout, okay, you're actually putting yourself in the exact same shoes as the rest of buy and hold investors, all right? You're not doing anything different. You're not swing trading. You're not day trading. You're not active trading. You're just a buy and hold investor waiting for that breakout to occur. Now, again, if timing is not a factor, that's okay. But if timing is a factor, if you're trying to time the market, which is why I assume we're all listening to this class right now, that's the no-no. And if you're trading options, oh my God, I don't even want to go there. Forget about it, okay? If you're trading options, you can forget the whole thing. I mean, it's a disaster. this thing's going to be this. You're going to buy an option for $5. You're going to wait for the stock to break out. By the time the stock breaks out, that option is going to be worth 20 cents. Forget about it, okay? It's just no fun. So this was a major dilemma for me. I really, I've been doing this for a quarter of a century. I've managed 2 funds. I've done it all. So I had a challenge, and I wanted to find the answer to this. I went on a quest. I literally became Mr. Sherlock Holmes, okay? I went on a quest to find what drives price before the big moves occur, before price actually breaks out, before anything happens, all right? That's what I wanted to find out. So I went back to the drawing board, and I'm a numbers guy. Everything I do is based on numbers, okay? If it's not quantifiable, it means nothing to me. And I mean nothing at all. I need everything to have a number value on it. Everything I do is completely systematized. I've been doing this forever, and at one point I had 3 MIT grads just crunching numbers for me. So what you guys are about to see is very, very, very important, and it's completely based on math and science. I did a lot of homework for you, so you don't have to, okay? Because again, I wanted to answer this question. I needed to get to the bottom of all of this. So over the last 20 years, the S&P 500 averaged only 5.9%. I know, you're probably thinking to yourself, that's impossible. That can't be. That's just not right. It is. If you don't believe me, look it up. Over the last, this is maybe, this slide may be a month or so old, but, and the market really hasn't done much since then, but if you look at the S&P 500, the total return, it's fluctuating between 200 and 220% in the S&P over the last 20 years. That's right, 20 years. That's not good. That's not good, folks. 5.98% is not going to make your retirement for you, okay? It's not even going to come close. So this is our baseline. This is what we're starting with, all right? So what I did, here's what I did. I took 17 fundamental strategies, and I took 17 technical strategies, and I tested them. I wanted to, remember, I wanted to get an answer. I wanted to uncover everything humanly possible. I needed to get an answer, okay? I mean, I lost sleep over this. So my criteria for the test, I wanted the most popular and well-known strategies. I wanted these strategies to be objectively programmed into a computer. If you couldn't program it, then I'm not into he said this, she said this, I think this stock is going to go here. That doesn't work for me. I'm a numbers guy. I need to have statistical data samples. So I also wanted to confirm we were on the right track. So I confirmed that the historic returns were in line with the numbers that we were getting, okay? Very important. I did this about as objectively as I could. And this is the fundamental graph. Here you can see the performance. This is from 1/2/99 till present time. And I guess this is about a month ago, so you can kind of give or take a little bit, but it's pretty accurate. And as you can see here, we have Martin Zwick, we have O'Neill, we have top earnings per share, we have Warren Buffett, we have Peter Lynch, we have price, we have price to sale, we have dogs of doubt. If you've heard of it, it's here. These are the biggest fundamental systems. I'm willing to bet there's a book or 2 written on every one of these strategies, and there's at least 5 or 10 hedge funds that follow these strategies. These strategies are taught in colleges and universities in MBA program. This is the real deal, okay? So the best performance that I was able to get wasn't really that high. It was actually William O'Neill. He's the author of Investor's Business Daily, How to Make Money in Stocks. He's an amazing, amazing publisher. And he had the CAN-SLIM formula for many years. So 18.8% was the best we could achieve. It wasn't 50 or 60 or 40%, but it was better than 5.8%, okay? And folks, if you have questions, I'll get to the questions after the class. I want to get through this because I have tons of information. I'm just getting warmed up here. So then we move on to the technical strategies. And again, if you're a fundamentals trader, then you would recognize these more. And if you're a technical trader, then you would recognize these more. So we have channel breakouts, Bollinger Bands, Aaron Oscillator, MACD divergence, parabolic SAR, ATR breakouts, modified RSI pullbacks. You name a technical strategy, and I tested it. And again, I wanted to get to the bottom of this. I wanted to see what makes these stocks tick. I needed to get, I was literally playing Sherlock Holmes. And what did I find out? Well, the best strategy out of all of these was a modified RSI at 22.4%. So that's what we got out of all the strategies we tested. Going back as far as 1999, the best performance was 22.4%, and the worst performance was the S&P 500 because that was just buy and hold. There was no trading strategies. That's just a simple buy and hold comparison. So instead of 5.98%, we were able to get 22.4%. And in case you're wondering what was modified about the RSI, I simply changed the trading days from 14 days to 10 days. And I tested the S&P buy and hold, overbought, oversold. Very, very simple test. There wasn't anything really extravagant about it and nothing sexy about it. It was just a regular test. And I was able to outperform the stock market by about close to 4 times, about almost 4 times. So modified RSI 1, we got almost 4 times better results than the S&P. But you know what? 22.4% for somebody who's market timing is just not that exciting. I believed we could do a lot better, all right? A lot better. So I wasn't going to settle for 22.4%. I wanted to earn 45 to 50% per year. That's what I'm looking for. Now, can you imagine making 45 to 50% a year? That's huge, okay? If you could, just to give you an idea of what that's like, in only 5 years, if you start with $10,000, that comes out to $115,806. That's more than 11 times on your money by simply compounding, all right? Can you imagine that? Can you imagine starting with $10,000 and in 5 years, not 20 years, not 30 years, not 50 years, but only 5 years having 115? That means if you started with $100,000, you would have well over $1 million, right? And that's real money now we're talking. So you could really do a lot of good for your family and for yourself. You could afford to take vacations. You can buy houses. You could do a lot of stuff with 45 to 50% return. That's real money. So that's what I was looking for. And I wanted to see if I could do this consistently. Not 1 year, not 2 years, not 3 years, and not even 10 years. I wanted to see if I could generate these kind of gains annually, consistently over time. This was not an easy exercise, and I spent a lot of time working on this solution. So here are the 2 important questions we have to ask. What type of stocks experience the biggest gains? All right, that's number 1. And number 2, what's the best trigger for explosive price moves? All right, if we can't answer these 2 questions, then we're back to step 1. We're just not making any headway. So I needed to get to the bottom of this, and I did. So here's what I found out. And regardless if you guys follow me, regardless if you guys join me, regardless if you guys believe anything I say, take this. This is very, very valuable. And if you take one thing from here, from this course, take this. This is very, very, very important. And, I talked, but this is important. This is very, very important. So it takes much more volume to move a massive stock that trades 13 million shares a day than a stock that trades 1 or 2 million shares a day. Imagine you have a hammer and you're knocking a nail into a wall. Imagine how much harder you have to hit, or imagine how much less pressure you need to hit a nail that's smaller than a huge nail. It's the same thing. Or throwing a ball, it's the same thing. There's a big, big difference. These companies, these smaller companies, they're not as saturated as mature blue chip stocks or the top S&P 500 stocks. They have room to grow. They're not bloated. So here are actual numbers for you, all right? This is average gain over 1 quarter. I took the biggest gainers from the S&P 500, and I took the biggest gainers from the Russell 2000, all right? And I wanted to see what the average gain over 1 quarter is, okay? 285.33% and 43.72%. Small cap, smaller stocks gained over 6.5 times as much. That's right. And that's not options, okay? That's just the stock. If you have a 6.5 time greater multiplier on the option, that makes the option so much more valuable. It's not even funny. I mean, it's amazing. That means that option can move 10 times what the large cap option can move. So this is big. And again, this is all real information. Go and check the guides, look at the numbers, check this for yourself. And I want to clarify something. I should have done this earlier. When I'm talking about small cap stocks, I'm not talking about over-the-counter stocks. I'm not talking about penny stocks. I'm not talking about stocks that are just coming onto the exchange. I'm talking about stocks that are worth between $1 and $2 billion. Think Amazon and Netflix 20 years ago, 15 years ago. Not when they were just starting out, but when they were already public, okay? But before they joined the high ranks of the S&P 500. So we're talking about companies that are already public, that are already worth over $1 billion, but they're just not big enough to join the S&P yet. And that means they haven't reached peak maturity. And that means they have a lot more upside to go, okay? So I'm getting really excited just talking about this stuff. So now we know we answered the first question, right? That's our first question here. What type of stocks experience the biggest gain? We already know it's smaller stocks, not tiny stocks, but smaller stocks, all right? Russell 2000 stocks. Those will give you the best bang for the buck, all right? If you don't believe me, just look at these numbers. This is average over a quarter, 6.5 times as much. So now let's go to the second piece of the puzzle. What's the strongest catalyst? What's the strongest trigger for directionally intense momentum in the price of the stock? We all want to know that, right? I mean, that's what we're here for. Let's get into this. Again, this is very valuable. I spent a lot of time and money figuring this out. And again, if you guys are going to take just a few things from this, please, please, please take this. This is very, very valuable. Let's look at Tesla, all right? Tesla is one of the fastest growing companies since going public in 2010. Yes, believe it or not, but Tesla's been public now since 2009 years, okay? Time sure flies. The stock is one of the biggest gainers on Wall Street, all right? The stock has gained 3,000% in price. That's huge. I mean, that's massive, all right? But let's look a little closer now. Tesla has not made any profits. You see that chart? 3,000% gain in the price of the stock. Zero, nothing. Annual net income, negative. Tesla has not made a net profit. I know you're probably thinking to yourself, that doesn't make any sense. How can the stock go up 3,000%? 3,000%, all right? I mean, the stock is worth like around $300 now, all right? The company hasn't made any money. So what's going on here? I mean, I'm a little confused, aren't you? I mean, this doesn't look right. It must be an exception, right? It's got to be one of a kind, right? Well, not even close. So why is Tesla stock up over 3,000% while the company hasn't made one dime in net profit? Can you tell me that? If you can explain it to me, I'm all ears. Actually, I do know why, and I'll tell you in a second, but it's fun to go through this. So in case you guys are thinking it's just a mirage, it's a coincidence. Maybe Tesla got overlooked. Maybe people just like the name. Maybe they like Elon Musk making crazy stories in the news every other day. Who knows? I mean, Tesla's Tesla. It's got to be an exception to the rule, right? Well, no. Let's look at Zillow. You know that company that you type online? It tells you what real estate near your house is worth. Well, this company has been public now since I think about 5 years, 6 years. Guess what? It's up 5,000% since going public. 5,000% growth since going public. Let's look at the numbers. No positive income, no net profits. The company has not made a net profit, all right? Yes, this is the stock we're talking about. It's up over 5,000%. So why is the stock, why is Zillow up over 5,000% while the company hasn't made a dime in net profit? Please explain this to me. I want to know. I mean, you know, stocks, you're supposed to look at balance sheets, company profits, all that good stuff. Company makes more money, projects more profit. When it says it has less money, company goes down, right? I mean, that's what we all know, right? How can Zillow and Tesla make this kind of money, all right, returns for their investors without making a dime in net profit? If you're scratching your heads, well, you know, what can I tell you? Here's the answer for you. Investors believe that at some point in the future, Tesla and Zillow companies will be worth substantially more money. Their present value is entirely, and when I say entirely, I mean entirely, because right now, look at this. Look at these numbers. That's pitiful. These are pitiful numbers, all right? Right now, these companies are making nothing. So their entire value is based solely on future expectations, all right? And that's the biggest secret. So remember the two questions, what kind of stocks and what's the biggest catalyst? What kind of stocks is smaller stocks, not bigger stocks, smaller stocks, not tiny stocks, but smaller stocks. And what kind of catalyst? Future expectation. So what did 20 years of data tell us? Investors don't pay attention. They don't give a crap, excuse my French, about what already happened. It means nothing. Markets look ahead and largely discount everything that's known. The big moves are in speculation of what could happen, not present facts. What could happen, all right? The biggest takeaway here is what could potentially happen. Not what may happen, but what could happen, okay? So I purposely left out the best performer till now. It doubled the performer of our top strategy. Remember our modified RSI? It had a 22.4% versus 49.14% average annual return. Remember what I told you guys in the beginning? I was looking for 40 to 50% return, not 20% return. This outperformed the S&P by 8 times over 20 years. Now, when I say 8 times, no, I don't mean make 500% one year and made 0 another year and made 5%. No, I mean consistently. Let me show you. And again, this is not what I think, what I believe, what I hope. This is numbered. This is simple math. So if you invested just $10,000 in the S&P 500, you would come out with $30,777 after 20 years. So imagine you're trying to save up for your kid's college fund, and you put $10,000 in there 20 years ago. $30,000 is what you're left with. That's it, $30,000. Believe it or not. I know it's shocking. I know it's almost. I mean, it's terrible. It's terrible. It's pitiful. All right. It's not a lot. That's what 5.98% gets you. All right. So what if you invested in my top strategy? All right. Your average annual returns of 49.14% can grow $10,000 into over $19 million in less than 20 years. Remember the scenario I just gave you? You start with $10,000, you save for a rainy day. Next thing you know, 20 years goes by, and what do you have? $30,777. Well, here you have $19 million. Now, you can definitely send your kids to school with that money. You can retire with that money. You can take a vacation with that money. With that kind of money, you could do anything you want. Almost anything you want, all right? So let's take a look at some of the gains. Let's look at some of the trades. 59% in 14 days. Again, no breakout. If you waited for the breakout, you'd be in around 11.5%, right around the time we took profit at 12. We got in around 850, all right? 59% gain in 14 days. That's amazing. SunPower options, this is if you traded the option. Remember, if you traded the stock, you would see 59% gain. If you traded the option, you would see 430% gain in only 14 days. Now, can you imagine for a second, can you imagine, 14 days is less than half a month. Can you imagine what 430% gain in that amount of time is? If you start with $1,000, you end with $4,300. If you start with $10,000, you end with $43,000 in 14 days. Those are the kind of wins we're talking about. Those are the kind of gains that are getting me excited. And this is why I told you in the beginning that what I'm going to show you is going to change your life. It really will. That's what I'm here for. Momentum indicator wouldn't catch the trade till 3 days after entry. Same trade. The breakout entry happened right around the $10.20. By the time profit target came, we barely made $2 on this trade. But if we entered before the breakout, we would enter when the stock was at $8.50, long before the breakout occurred, way before the breakout occurred. Career Education saw 48% gain in price of the stock in only 28 days. Notice we got in on the 7th. The big breakout didn't start occurring until the 9th. We got in a few days early and we were able to catch the entire run. Also, if you were buying options, the option would be undervalued at this point because volatility hasn't begun creeping up just yet. 325% gain in the call option in only 28 days. That's right, 328% gain. So technical indicators wouldn't catch the trade till 2 days after entry, all right? That's very important because, again, by the time technical indicators catch the entry, it's over. So it's a totally different way to analyze price action. There's no fundamental indicators, there's no technical indicators, and there's no fundamental projections. This is totally different and totally new, and it's not something you've seen before, and it's not something you'll be able to do on your own. It's earnings revisions, all right? I know I've been holding it this entire time. I didn't want to spill the beans, but I wanted you to kind of understand what I'm talking about, but what we're talking about is earnings revisions. So what was the most important and the biggest catalyst that I was able to come out with that moves the price of stocks without a question of a doubt? It's earnings revisions, all right? But there's a specific way to deal with them and trade them, and I'm going to talk about that now. Earnings estimates drive price. Financial analyst firms provide an actual dollar value or a price range of where they believe the price of the stock should be. Now, how quickly price reaches the recommended value depends totally on the credibility of the firm and how much influence they have, all right? That's very, very important. So you can't just say, oh, okay, well, now I know the answer. Earnings estimates where the money's at. That's what I'm going to do now. That's how I'm going to play the game. That's not how it works, okay? That's not how it works. You got to be very careful with this, and I'll show you why. If you only focus on positive earnings revisions, you could wind up with a massive, massive disaster. I've had a few guys try this, okay? I've had a few guys try this, and it wasn't pretty. You know, you ever heard the saying, "No, I know just enough to be dangerous"? Well, if you don't know this, then you know just enough to be dangerous to yourself, all right? Mostly dangerous to yourself. If it was easy, everyone would be doing it. Remember, I've managed 2 hedge funds. I've managed a brokerage. I've been doing this many, 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 many years. I was partners with the Turtles at one point. So I know what I'm doing. You guys may not. So please pay attention and don't try this on your own, all right? You need to have the right number of positive revisions from key investment firms. You need to also have a lack of negative earning revisions from relevant investment firms. And you need a proprietary earnings and momentum revision filter that we developed. All of this took years and years of time to develop. It wasn't easy, and it wasn't something we did overnight. Take a look for, this is a perfect example, all right? I wanted to show a perfect example. I'm sure most of you have heard of Barclays. They're one of the biggest investment bankers. Well, IBM and Barclays, they hate each other. They don't work together. I mean, don't quote me on this every time, but about 9 out of 10 times when Barclays recommends IBM, it's near all-time high and price is about to reverse. So you got to have the right numbers. Your database has to know which analyst firms makes the recommendation. So it's important to know which investment firm has the propensity to drastically move the price of the stock. If you don't have that, it's just not going to work. The investment firm can make all the difference in the world. If it's a wrong investment firm, forget about it. You really have to have this down to a science, okay? And we did. We took all the investment firms, we took all the data, we created a database and a bank, and it updates in real time, and it costed a fortune. And we run it around the clock. So there are over 4,700 analysts out there, and each one specializes only in a few sectors or industries, all right? If the right group of analysts upgrade the stock, you will see massive price appreciation very, very quickly. These things will move very, very quickly. For example, Overstock, 34% gain in only 21 days after entry signal, all right? Again, notice there's no breakout. Nothing's occurring. There's no notice. This stock is not on everybody's radar. No one knows what's going on. It's just a stock trading. There's no news out. We buy the option. Next thing you know, 21 days later, not even a month, 34% gain. Now, the option, again, if there was notice that this stock was going to rise, this option would already be so valued. This option would already be pricing in the gain, but it wasn't. And that's what got us to give us 328% in 21 days. That's 21 days, folks. I'm getting too excited about this. Momentum indicators, 10 days later. That's how long it took them to find it. If you followed one of the 3 momentum indicators, either a moving average, the RSI, or the MACD, you would get in 10 days later. You would get in right below the profit target. So instead of getting in at 19, you would get in at 24.50 and you would get out at 26. Not a major, you're not going to get 328% doing that. Not even close. So Kenneth Corp, 35% gain in only 29 days after entry. Again, notice the stock isn't breaking out yet. It starts breaking out right around the 14th. We're getting in on the 7th. That's 35% gain in 29 days, less than a month. Option, 327% gain during the exact same time period. Can you guys just even fathom for a minute what 327% gain in less than a month can give you? The kind of freedom, the kind of, I mean, this is amazing. Just think about what this can do for you and your family, your friends. Anything you want, you can afford it with these type of trades. These are high profitable trades. Momentum indicators caught less than 40% of the price gain. Our entry was around 18. The breakout occurred around 21. Profit was at 24. If you waited for the breakout, you would only make about $3, $2.50 on this trade instead of making $6. So it's a huge, huge difference in the way you trade. So how does the Billionaire breakout methodology work? And that's the name of this methodology. It's called Billionaire breakout methodology. It's a computerized trading model. It analyzes a basket of stocks to see which analyst firms influence the price with their recommendation. It includes the number of positive revisions, the number of analysts standing behind the upgrade, their core specialty and track record. And again, Billionaire Breakouts targets small caps and mid cap stocks. There are smaller number of shares outstanding, and they have the ability to generate the right institutional exposure because they have that type of, they have less float, and the less float they have, the more they will gain. For example, and this is a perfect example, look at a Medisys, 34% gain in only 21 days after entry, no notice. 21st is when we entered, breakout occurred on the 30th, 34% gain in 21 days before anyone got wiser. Now, if you traded options, you would make 255% during the entire 21-day period. That's 255%. If you started with $10,000, you would make $25,550 in 21 days. That's a lot of money. So keep in mind, these are not bloated, oversaturated companies that already made their fortunes. These are not companies these companies, huge companies, need to see continuous buying pressure. The reason is they're too big. You need to keep knocking at them to keep moving. You need to have a large fund continuously accumulate. Small caps don't need that, okay? They don't require nearly as much buying pressure to gain significant value. Again, it's a whole different world. This is a perfect example. I was actually alluding to this a little bit earlier. I forgot that I had this slide in the deck. But this will give you a good example of what I'm talking about. It takes substantially less effort to throw a tennis ball compared to a bowling ball, all right? And that's what we're talking about. When a stock gets really big, like, for example, let's take Apple, okay? In order to move Apple has so much market share, or Amazon. In order to move these stocks, you literally have to have a third of Wall Street pumping money into it day in and day out. If you were to pump that much money into a small cap stock, the stock would triple in price in less than 2 days, all right? So just understand the difference of what we're talking about, the float. It's a whole different world. So again, these are not penny stocks. These are not startups. These are not speculative companies. These are public companies ready for massive growth. The average value of a company, the average is $9 billion, and the average market cap is between 1 and 2. So again, we're not talking about some dinky over-the-counter stocks. We're not talking about some tiny companies. We're talking about the real deal. Think Amazon, think Netflix before they became the darlings of Wall Street. Think about Netflix when they were still shipping movies back and forth, or when Amazon was still doing just retail, books. Everybody knew about them. People were using them, but they weren't the biggest names out there. That's the kind of companies we want. We want companies that are about to take off and become mainstream, all right? Billionaire breakout methodologies will help you diversify and lower risk, and let me show you why. And this is huge. This is very, very important. Small cap stocks are substantially less correlated to the overall market. Now, I'm going to explain to you why this is important. I realize that if you guys start trading this strategy, you're still going to be trading large cap stocks. You're still going to have your money in an investment fund and so forth. You want to increase diversification. Diversification is the last free lunch that Wall Street will offer you, okay? Diversification is huge, all right? Most retail traders do not understand diversification. They think if they buy one stock and then buy a different stock, they're diversified. That's not how it works, all right? Let me give you a little lesson. Here's two stocks. This is Delta Airline and this is UAL, all right? Two airline companies. These are two different stocks. They're correlated about 85 to 95%. Buying two of these stocks is almost identical to just buying one of these stocks, all right? Just buying twice as many shares. And I get this all the time. Roger, I'm diversified. I own 4 bank stocks, but they're all different. And I own 3 tech stocks, but they're all different. No, they're not all different. They're highly correlated. Stocks in the same industry group are correlated. So if you start an investment program and you have a hedge fund or a bond, money in a hedge fund or money in a bond, or even money in the SPY, the S&P 500, you're not diversifying. In other words, what does that mean? How is that going to impact you? When the stock market falls, everything will fall. Your portfolio will fall too. We don't want that, okay? We want to add diversification, all right? The threshold, now I'm getting a little statistical here, but try to understand, try to follow along. I'm going to try to make this as simple as possible. The correlation the threshold for high correlation is 0.66. If anything moves, if two assets move 2/3 of the time together, that means they're highly correlated. Trading highly correlated assets will increase your profit potential. It will increase your profit potential, but it will also increase your risk of loss, okay? So you're not going to get that free lunch on Wall Street because your risk and your profit are both going to move in the same direction. You don't want that. I don't want that. Nobody wants that, okay? We want true diversification. Let me show you this. This is very powerful. This is our model over 3 years. I wanted to give you the difference between our model and the S&P. Look at the correlation with the benchmark. It's 0.26. 0.66 means it's very correlated. 0.26 means it's hardly correlated. 0 would be no correlation. 0.26 is mild correlation. It's ideal. It is ideal, which means you can trade this program with your other programs and you will not have the same results. But I'm sure you're saying, what does that mean? How does that impact me? Show me some proof. Here it is. This is a graph, all right? Please, 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 please pay attention to this. This is the Billionaire breakout graph over the last 20 years. Yes, 20 years. The lower column, the benchmark, is the S&P 500. The upper column is the benchmark. Look at the performance on the benchmark in 2008. It was down 36%. The model made 6%. No correlation. Look at the excess every year that the model beats the S&P 500. That's non-correlated. If you were to see correlation, you would see the numbers mimic each other. Notice there's no losing year. What happened in 2000? What happened in 2001? What happened in 2002? And what happened in 2008 in the stock market? We don't know and we don't care because we're not correlated. Well, imagine you can trade and not worry about what happens on CNN. Something wrong with the presidency, something wrong with China, it doesn't matter. You're not correlated. You're not a slave to the overall stock market, okay? You don't want to be locked in. You don't want to be handcuffed to the stock market. Nobody wants that. The reason most of us do this is to get freedom from the stock market so we don't have to be dependent on the stock market. So what I'm offering you is true diversification. This model made 27.21% on the underlying, not the option, while the S&P closed up 3.5. If you traded the options generally get about 8 to 10 times more risk to reward. Imagine you'd make over 100% return, while the S&P 500 barely closed positive for the year. So this should be eye-opening for you, all right? Truly, truly eye-opening for you. No losing years between 1999 and 2018, while the S&P had 4 losing years. And more importantly, losing years happen. It's part of life. But we haven't had a losing year, and look at the returns. They're not correlated to the S&P 500. You're trading stocks that are doing their own thing. So you avoid sitting in stocks that are not moving, all right? Look at this. This is very important. This is IBM. Stocks move. 75% of all movement in a stock happens in 4 periods throughout the year. I'm sure you've guessed that by now. Earnings, right? Stocks move throughout earnings, and then they just kind of sit there. So you're limited. You have 4 windows to make 75% of your entire gain on the stock market in 4 periods. And I'm showing them to you here. And if you don't believe me, look at any stock, look at when it moves. It moves during earnings, all right? And why is that the case? Because earnings is when news comes out. It's when there's a catalyst for the stock. What I'm proposing in only trading stocks that have catalysts coming out on a daily basis. So you don't want to have to wait for earnings season for big price moves. Smaller stocks can move quickly when the right analyst begins coverage or revises the earnings. So you get an opportunity for big moves without having to sit on the sidelines for most of the year. Nobody wants to sit on the sidelines. If we did, then we would all be buy and hold investors, and we're not. Take a look at this, gain capital. No breakout, nothing. Our system told us to get in. There was a positive revision, 22% in 7 days. Only 7 days. Can you imagine 22% in 1 week? Now, this is where it gets fun. Can you imagine making 210% in the same 7 days? Now, when I say 7 days, I'm talking Saturday and Sunday when the markets are closed. I'm talking here actually 1, 2, 3, 4, 5 days. 5 trading days. 210%. 210%. Folks, this is amazing opportunities we're seeing, all right? So Billionaire Breakouts keeps you in the stock and option that are on the move. We evaluate positions on a weekly basis. You buy options on stocks that are ready to move. If there's no action coming your way, you just get out. It's that simple. We're not buy and hold. If the price explodes higher, you continue holding the position. Ubiquity Networks, 37% gain in 22 days after meeting our criteria. And again, notice when we got in on the 12th of August, long before the stock started rising. Stock didn't begin breaking out all the way till the 22nd of August, several days later, all right? Now, if you traded the option, watch out. 746% gain, folks. Can you imagine putting $1,000 into an option, coming back and then telling, somebody's asking you, hey, how did you do in this option? You've had it for a few weeks. Oh, I only made $8,000, 746% return in less than a month. That's amazing. And that's the kind of gains we're seeking, folks. That's the kind of gains we're looking at here. So the best part, by the time indicators caught wind of the momentum, we're just days away from taking profits. Members' feedback, all right? It finds the needle in the haystack right before the trend begins. I've never seen anything like it. Thank you, Tom. I didn't believe it till I saw it. I figured out how to find the winners. You figured out how to find winners before anyone else. I'm getting too caught up in my own testimonials. Roy H. Thank you, Roy. After 40 years of investing options and spending a fortune on alert services, I think you finally nailed it. Peter M. from Oklahoma. The market tanked all week and my options are up 20%. I wish this method was around when I first started. Terry C. And lastly, I'm really happy since I started following your advice about a month ago. My accounts have gained about 10% in the last month. Aaron B., Idaho. So, Billionaire Breakouts identifies 6 top stocks and best options on a weekly basis. Finds stocks that fit my multi-step algorithm. It's really that simple. There's nothing for you to do. There's nothing for you to figure out. I give you everything and I spoon feed it to you. The Billionaire Breakout portfolio is reviewed every 7 days. You don't have to think about when to buy or sell. Each stock or option gets only 7 days to prove itself. Why is that important? Well, if you're trading options, you don't want to buy options options are like a decaying asset. They're like ice. You want to buy option and you want to see that option move. If the option doesn't move right away, it's no good. It's going to start decaying. We don't want that. You don't want that. Nobody wants that, all right? So each stock or option only gets 7 days, and that's including weekends. If it doesn't prove itself in that amount of time, forget about it. If directional movement doesn't come our way, the position is eliminated. We make it super, super, super easy for you, especially if you're an options trader. You get the strike price. You get the expiration date. You get the entry price, and you get the exit price. There's absolutely nothing to figure out. All you have to do is place the trade. It's that simple. Nanta gained 21% in 28 days after Billionaire Breakout generated the entry signal. Notice, no breakout. Founded before the breakout. Now, best example, the option. 1,453%, folks, during the same 28-day period. Can you imagine? Can you just imagine for a second what 1,450% gain can do for you, for your family, for your kids, for your loved ones? I mean, this is amazing opportunities. These opportunities, you get them all the time with this program. This is not an example. This is just a common trade. All right? So we're really looking to do something amazing with the service, and it's a beast. Billionaire Breakout is a complete program for explosive profit opportunities. What do you get? 24/7 access to Billionaire Breakout members portal. You get complete order entry instructions for stocks and options. Every 7 days, you get email alerts and SMS alerts. They're included too. So if you're busy, you'll get alerts on your phone. You'll get a getting started guide. You get unlimited email support from me, and I respond quickly. You get daily position updates, analysis, and coaching, and a position tracker. You get everything you need to succeed. And yes, we are capping it at 50 members. We don't want everybody and their mother trading these. We just don't want that. We want to limit our group to a selected few students who are going to be with us for a very, very long time. I'm looking for traders to partner up with me for a very long time. I'm looking to make guys successful, all right? I'm not looking for just anybody. I want to give you guys a lot of attention, and I want to answer questions, and I want you guys to be part of my team. That's what this is all about. So if you have what it takes, this is the opportunity for you. So special bonus for options traders. If you guys want to learn more about options, I'm giving this to you because I get a lot of emails. Roger, what does this mean? How does this work? I created a video. It gives you all the details. Everything you need to know about options is going to be in these video tutorials. Everything you need to know. It'll answer all your questions, how to select the best strike price, how to buy undervalued options and sell overvalued options, how to work the order. This program, this video is a great complement to Billionaire Breakout program. It helps. And again, I'm here to answer all of your questions. I'm very responsive. Once you access the course, you get an email address. You can send me an email and I'll respond. Either myself or my assistant will respond very quickly. The regular price is $39.97. And for 49% average annual return over 20 years, that price, we could sell this thing all day long. We really can. And we did sell it at this price. But today, because this is a special, and because we're doing this weekend only, we're going to have 50 spots for $14.97. And again, this is the only time you'll see this deal, and I'm doing this because it's a weekend special price. So go to wealthpress.com/special. I'm really, really, really psyched up about this, and I'm looking forward to working with 50 members and trying to make a major difference in your life. I want you to join me. I have something really, really, really important for you, and this is just going to make a big difference in your life. I know it. All right, let's continue. We stand behind 100%. I always stand behind everything we do. We give you a 100% performance guarantee. If over the next 12 months we don't beat the S&P 500, something that we have done every year for 20 years, you get the next year on us, all right? This is a very, very, very low-risk deal. You have the opportunity to make over 49% per year annual. That's what we made over 20 years with this program, and that's not including options. With options, it's just that much more. Take advantage of this opportunity. It's not something you'll see again. Join an elite group of traders, all right? You'll get Billionaire Breakout 1 year, $39.97. Bonus, number 1, daily coaching, that's $1,000. Bonus 2, capture triple-digit winners. Total value, $53.97 today. Today you're going to pay $14.97. Yes, $14.97. More feedback. I'm up 32,100 at this moment. I have never made this kind of money in the last 6 to 7 years of trading, Dan. Anytime you want to alert me to such lucrative option opportunities, please do so. That was just plain amazing. Thank you. Getting involved with your company has been one of the best decisions I've ever made. Murray, I believe I saw your name on the screen today. So please visit wealthpress.com/special. All right. Do it now. We don't have that many spots left. wealthpress.com/special. All right. Let's take some questions. All right. We got a question here about how many alerts. You get 6 alerts per week. You get 6 alerts on every Monday. You get 6 alerts, and if they don't work out, we cut them at the end of the session. And then, I'm sorry, at the end of next Monday, we start all over again. So you're always getting 6 alerts per week. Thank you very much for the nice words, folks. I'm trying to see if, thank you guys. Is there any other questions for me? Yes, please visit wealthpress.com/special. Yes. Yeah, do it now. I know that there's some people on there right now. And again, if you guys have any questions, please feel free to ask. Do we continue to hold? Yes, if the stock is breaking out. I'm sorry, I'm having some. Yes, there is a lifetime offer, Larry. You'll be able to purchase the lifetime after you secure the 1 year. And yes, Gene, we continue to hold. If the price continues moving, we continue to hold. Yes, there's going to be alerts coming out tomorrow afternoon for the next week. They always come out on Sunday, and if they don't, and again, if the trade doesn't work out, we only hold for 5 days, and then the trade then we move on to another trade. There's no short trades, just long trades, because there's no correlation with the stock market. We don't need to trade short. These are all stocks looking for a big move. Delta typically on the options about between 0.40 and 0.50. And we don't buy options that expire in we don't buy options that expire in 7 days. We buy options and then we liquidate the option. So there's a lot less decay. Any other questions? No, we don't. Hi, Gene. We don't recommend 70 delta. We go a little bit lower, actually. Hi, Neil. I don't have the last 30 days of performance actually here with me. If you'd like, you can email us and I can get you that information, but I don't have that here with me. But it's been doing pretty strongly. Delta's about 0.40. Somebody's asking about the delta. It's about 0.40, 0.50. Well, somebody's asking, I'm arriving late, how far away is the expiration on these 7-day options? The expiration's about a month or two away. We're not looking for decay. We're looking to hold them for a week, and then we're looking to offset them. So we will sell the option, we will buy the option, and then we'll sell the option 7 days later. Great. Welcome, Gene. Thank you very much. Glad you're a member. No, we don't have a 3-month trial period on this program, unfortunately. I wish we did, but we don't. There's a limited spots left, and I know that they're going actually right now. We don't have it. And guys, this is going to be the best investment you will make this year. I promise you that. Visit wealthpress.com/special. Preferred platform, honestly, there's no preferred platforms for this because it's so easy to use this and to trade this. It works with anything. We have a lot of guys who use Interactive Brokers, TOS. You buy options that are expiring in a few months, but you're only holding them for a week. We give you a limit order, and we only pick stocks that have liquidity. Somebody's asking about liquidity. Good. I'm glad. Thank you, Cole. Thank you. I'm glad you signed up, and I look forward to working with you as well. We got a lot of people signing up, actually. No, we don't move the price of the stock. That's why we're only taking 50 people in. We're careful. We take 50, and then we see how the volume liquidity goes, and so far we haven't had any issues whatsoever. It's been actually, we have not had one email about someone not getting their fill because we're giving the limit order entry prices right before the open on Monday, and we check the S&P 500, the futures price, so we make sure that your limit order is right on line with where it opens, so people are getting filled very, 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 very quickly, and nobody's having major issues here. Not micro stocks, Neil. Only small micro stocks or 3 times ETF? No, not 3 times ETF and not micro stocks. We're trading medium. I'd like to call them medium cap stocks, but they're not. They're really smaller cap stocks. But these are big stocks. You will not have any liquidity. And no, this is not for forex. This does not work with forex. This is for stocks and options. Any other question, guys? John, I'm trying to, my question box is very small, so I'm trying to make, we trade all type of stocks, biotech stocks, consumer stocks, it doesn't matter. It's the kind of recommendation and what impact that recommendation will have on the stock. So every kind of stocks. John, liquidity is not an issue at all. We pick only stocks that are highly, highly optionable, and we give you a limit order. You will not have an issue getting filled on your option. We have not had one email complaining about a price fill on the option since we started. Not one. So visit wealthpress.com/special. You're not going to have that problem here at all. I promise you, John. Let's see, more questions. You buy the options. Some WL is asking, how long do you buy options? We buy the options for 1 week, and if they don't do anything, we cut them off, and if they continue, we hold them. We're not buying options that expire in a week. We're buying options that have plenty of time till expiration. We're trading the option like a proxy, okay? So just FYI, we're not trading this option to expiration. So we're buying the option for 2-3 months sometimes and liquidating it after a week if nothing happens. Preferred Spike is asking about preferred platform. I like Interactive Brokers, Tasty Trade, and Thinkorswim. We don't have a 3-month trial, guys. I apologize. You could start with a small account, guys. Spike is asking about small account. You could start with a $2,500 account, $5,000 account. You don't need a big account for these. We're not buying $50 Amazon options. We just don't do that. And there's no trial. We have just too much demand for this program. You could trade this with a very small account, and we don't use spreads. This is all just buying call options. There's no spreads. There's no getting level 2, level 3 certification. You don't need a large account. I made this stupid simple. I made this so easy, anyone can join. You can start with a small account. $2,500, $5,000 is all you need. Mike, I don't have the performance here. We have a spreadsheet that keeps track of every trade, but we've been doing very solid, and there's been nothing unusual about the performance at all. It's been right in line. Okay, any other questions, guys? Somebody's asking about my connection with turtles. I was a partner with one of the turtles in a hedge fund. I was partners with 2 economists in one fund and with one of the turtles. I don't want to get into names and all that because we're still doing some business together, and I don't want to get into that. But back in early 2000s, I was partners with one of the turtles and with 2 economists. And one of that economists is right now the senior financial economist at the White House. And I'm actually in Washington, D.C., and I'm going to be visiting him in a couple hours after this is over. We're still really good friends. All right, somebody signed up with a lifetime. Option came up. Just email me about the lifetime, Jim, and I'll help you out. Just email us, and we'll help you out with the lifetime. There is a lifetime. There's no put spike because we're looking for stocks that are only increasing value over time. We're not looking for stocks that are going to be called lower. We're only looking for stocks higher. Remember, these are smaller stocks ready to explode. Yes. What was the question, Wayne? Do you lock in profit? No, we don't. We stay with the stock and we lock in the profit on the winners and we liquidate the losers. We don't use stop losses because we're only holding stocks for 1 week. All right. Any other questions?
Oh,
yes.
I was just hey, you.
Hey.
It's Jeanette.
Yes.
Yes, I was going to say if you could just take maybe 1 or 2 more questions and then wrap it up, we could move on.
Yes, no problem, Jeanette. I'm okay. Sorry, I started at an odd time, so I don't know.
I know you did, and I'm thankful. I am not fussing. I just want you to know I'm here.
Yes. All right, guys. I'm finishing up again. Take advantage of this opportunity. I know a lot of times life offers you things and you don't know if you should take an advantage of it or not. I'm truly, truly offering something amazing for you guys. I know it may sound too good to be true, but it's not. This is a proven program. I've backed it up with a lot of stuff. I put my life into this. This is an amazing opportunity, and I'm looking for a handful of members to take along to the journey with me. I really am. If you want to join my circle, go to wealthpress.com/special. At $14.97, this is the best deal you're going to find. Thank you, Jeanette. I appreciate it.